Hi guys, and welcome to my YouTube channel. My name is Zwannda, and in this video I'll be covering things that you need to consider before buying a car, especially if you are a first-time buyer. So majority of South Africans actually buy a car by getting financed. It could be through the bank or other financial institutions. So in this video I will only cover purchasing of a car by getting a loan, right? So if you're planning on buying a car, the first thing that you need to do is to make sure that your decision is not rushed. I know after graduation and getting your first job, you will start feeling the pressure. It could be from family saying, when are we seeing your car? Or from friends who you graduated with who have started buying your car, their cars, and you feel like you also need to buy your own car. Also, it could be from colleagues who say, we know how much you get paid on this graduate program. We think you can afford buying a car. However, affordability is not one size fit all. So just make sure that you buy a car in your own terms. I personally had to wait 3 years for me to buy my first car. So also make sure that you have enough time to do your research, read up on different buying terms, explore other product offerings in a car that you like, as well as understand the different repayment methods that are available. Also, this will help you to understand all the terms and conditions throughout the process of purchasing a car at the dealership, as well as allowing you to get the best deal possible. Because if you understand what you're getting yourself into, you're most likely to also know when you are at an advantage to negotiate your deal any further. I personally think that a car is a long-term financial commitment, so just make sure that you get it right the first time. So another thing that you need to look into or need to consider is your affordability. So as you start to work, the conversation of buying a car will normally come up, right? You will discuss with friends, I like BMW, they will say I like Mercedes Benz. However, a model of a car is not a way of deciding the kind of car that you like, because there are so many factors that plays into that influence the purchase of a car or the type of car that you need to buy. And affordability is one of the most important one, because it has financial implication in it. So if you don't get it right, there is a chances that you can get yourself in debt or find yourself living in a constrained budget. So make sure that you understand your own affordability. So how can you go about understanding your affordability? So you take your income, you subtract all your necessary expenses, and you'll be left with what is called a disposable income. And what the dealership will do is that they will use that disposable income to determine your affordability. However, that doesn't mean that that's all that disposable income that you have. You plan on using it for a car, right? So you still need to assess your own affordability by taking a certain percentage which you plan of that disposable income, which you plan to use on the total cost of a car. And by total cost of a car, I mean installment included and other additional cost that comes with buying a car, like fuel, insurance, and tracker are included. So therefore you will know how much you're planning on or you're budgeting on this car, right? So you need to do this before you go to the dealership, because if you don't do this, you most likely not to know your limits and boundaries. So if you do this before you go to the dealership, you will know your boundaries. If they come back and say congratulations, you qualify for a 7,000 installment of a car, you would say that my budget is only 4,000, right? So this will help you to narrow down your options to something which you can afford. So another factor that you need to consider is understanding if you want to buy a new car or a second-hand car or an older car, right? I believe that the answer to this question actually lies on your personal needs and preference, as well as your pocket, right? Because there's pros and cons in both options. So you just need to find something that is most suitable for you. So when I was buying a car earlier on in the planning of buying a car, I actually figure out that cars are generally expensive. Even the cheapest ones are expensive. So I went on to look for a second-hand car. So when I was looking for a second-hand car, I also realized that I have limitations because I don't understand the technicalities of a car. So I could not know how to identify a good second-hand car. Of course, there's mileage, but there's a lot like a history of a car, and not knowing the history of a car kind of gave me heebie-jeebies. So I kind of went back to a new car and kind of sacrificed buying a higher premium just so I can get peace of mind. So other advantages that you can get on purchasing a car include, a peace of mind. Like I said, knowing you are the first driver, the first owner of the car would just give you peace of mind. And also, that you won't spend a lot on maintaining the car, on servicing a car on the first few years of owning that car. And also, most of the cars comes with comprehensive warranty and service plan, so you know that you're covered, right? So however, there are also advantages on buying a second-hand car, which is obviously that it's cheaper than a new car, so you can find a cheaper installments. Also, you can find a high spec second-hand car, especially if you go to reputable dealers, and if you know your technicalities around the car, you can find a good second-hand car with high spec with latest technologies as well. So you just have to assess both pros and cons, see what you have to lose by buying a new car and what you have to lose by buying a second-hand car, and weigh your options. Also, if you're a starter, I think a second-hand car is actually a good option, so you can also look into that as well. So another factor that you need to look into or consider, it's your credit score. So you also need to look into this before you go to the dealership. So or you need to start building your credit score before you can go to discuss the spec of the car that you need or start to approach the dealership. Personally, when I was at the university, I never cared about credit score. All I was told was credit is bad, and I stayed away from that. So however, I had to find out about credit score in an interesting way. So in my first few months of working, I wanted a phone. So there was this good phone that I wanted, and it came with good data plan. So I was like, let me go to the service provider and get this phone. So they did my application, and to my surprise, they came back and say, your loan application has been rejected for this phone, right? And when I further inquired about why it was rejected, they told me that I did not have enough credit history to prove that I have the ability to repay this loan. Although I was sure that I have enough disposable income to be able to repay this phone. So I had to go to retail store to open an account, and immediately when I opened that account, even without taking any clothes in that retail store, my phone was approved, right? So that's in a nutshell the way credit score work. However, let me just go a little bit into details about what it is. So a credit score is a number that is given to you according to how you spend, how you repay your debts, if you don't skip your installments and stuff, right? And you are given a number. That number determines your credit worth, right? So the credit provider will actually look into your credit score to see if you qualify to be given that loan, and if you qualify, they will also use it to determine how much interest rate, which is the percentage of repayment of the loan, do you qualify. So a person with higher credit score would get maybe a repayment interest rate of maybe 6%, and a person with low credit score would get something like maybe 10 or 11 interest rate. So you need to make sure that you build your credit score and you have a good credit score when you go to buy a car, because the higher the credit score you have, the better the interest rate that you're gonna get for your car, and the lower the installment you're gonna pay for that car. So in a person with lower credit score will get a higher interest rate and will also pay a lot on a monthly basis to repay that car. So make sure that you build your credit score. There are many apps online that can help you to check your credit score. I use Clear Score. You can check it out. The thing I like about it is that it gives you like a good report on your credit behavior. So it will tell you lost 2 points because of this, or you gained 2 points because of this, and then you can start to understand a way how you can construct your own credit score. Also, if you just want to focus on building a credit score from scratch, there is a page on Clear Score website where you can just go and click building a credit score. They will give you some action plans that you can do or homework that you can do for you to start building your credit score. Also, if you just want to repair a credit score that is already bad, they will also give you like some details. Of course, they will request some of your personal information for them to be able to be specific. And also, you know, yeah, and also if you want to get out of debt. So it's insightful, so you can check it out if you want to understand your credit score as well as try to build it. So it's very, very important, because you can, two people can own the same car. One could be paying it 4,000 rand, and the other one could be paying it 6,000 rand, simply because of the interest rate. So try to make sure that, you know, you build your credit score and make it better before you can go and purchase a car. So as we're talking about interest rate, I thought maybe let me just highlight another thing on interest rate that I found interesting as I was already buying a car, planning on buying a car. So when you get an interest rate, they will come back and say, congratulations, you've been approved for 10% fixed rate and 9% or variable interest, or 7% variable interest. So there are two kinds of interest rate. There's fixed interest rate and there's variable interest rate. Fixed rate is normally higher and variable interest rate is normally lower. So most of us normally jump into variable interest rate, myself included. My car, I purchased my car through variable interest rate, right? So what does it mean to have a variable interest rate? So your interest rate is actually linked to your prime rate, right? So when the repo rate increases, your interest rate also increases and your installment increases too. However, if the repo rate decreases, you benefit as well, because your interest rate also decreases and you pay less on your installment. So your installment fluctuates. So if you take a variable interest rate and you do not know what you're getting yourself into, you're most likely to get surprised when you see fluctuation on your installment. So fixed interest rate will simply means that you pay the same amount of interest and value of installment throughout the duration of the car loan. All right, so make sure that, you know, if you're taking fixed or you're taking variable, you're aware on what it is and you choose the one that you think, you know, you can take. All right, so with all this information that you know now, you can say that I want to go to the dealership. And I think that this is where things get really interesting, because you will get offered different kind of things, from delayed payments to balloon payment or residual payment and so forth and so forth, right? So when you get to the dealership, it's very important that you do not jump into the first offer that they give you, right? Because some banks are actually affiliated with some dealership are actually affiliated with some banks, right? So they could give you a biased advice. So make sure that you do your comparison, so that you are aware of what you're getting yourself into, or so that you know that they're not ripping you off. So you can do your comparison, and it will also give you a window of negotiation. If this dealership is offering something better, you can come back to this dealer and say, but this is what I have on the table. And also please be mindful that, you know, these people, the dealership, they trying to push volume, so they all given a certain amount of money just to make sure that they push the sales. So, you know, try to make sure that you can get as much of that money as possible to get the best deal for yourself, right? So as I've already said, at the dealership you can be offered different things. Let's say they come back and say, congratulations, which is something that they always say, congratulations, you've been approved for 8,000 installment, right, of this car, and you can't afford it. Your budget is like 6,000 rand, and you start complaining to them. I know that they normally say there's something that we can do for you, and they'll come back, they'll say, there's something that we could fix, and your installment came back to 6,000 rand. So most of the time they just give you a balloon payment, and if you're not aware, you'll be surprised at the end of your loan period when they say that we need your payment, which is the balloon payment, and they need it in cash, right? And if you don't have it, you could be selling your car just to make sure that you pay that balloon, or you could be taking another loan just to pay another loan. That means it's interest on interest, right? So what is a balloon payment? A balloon payment is a certain percentage that is taken out of your car value, so that you can pay an installment on the lesser amount. So this amount, you end up paying it as a lump sum towards the end of your your repayment period, right? So a lot of people kind of consider balloon payment because they think that their lifestyle would have improved, or they would have gotten a better job or started a business in the next 5 to 6 years, and they can afford that 30% of 300 rand or 300,000 rand, or 25% of it after 6 years, right? However, if you're taking a balloon payment, you need to make sure that you have a plan to save up for it. Let's say in case you don't have any promotions like you thought you would, right? At the end of the period, they will still want it. So let's say you're buying a car of a 400,000, right? And they give you a balloon payment of 30%. I think it's 120,000 rand. So you need to pay 120,000 rand at the end of your loan period. In as much as throughout this period, throughout the repayment period of 5 years or 6 years, you'll be paying lower installment because your car is no longer 400,000, it's now maybe 280. You will still pay the 120 at the end of your repayment period, right? So please make sure that you save up for it. And the way I think about it is that if you have a balloon payment, you could just be paying that into the car itself without taking a balloon payment. However, some people think it's a good idea, and if you think it's a good idea, just make sure that you save up for the balloon payment, right? I hope I'm clear with the balloon payment thing, but if I'm not, please make sure that you comment below and we can have a further discussion on the comment section, right? So one last thing that I want to talk about is insurance. This was an interesting one when I bought my own car, and I just want to share the things that I learned. The bank won't actually allow you to leave the garage with the car without having an insurance. So they make sure that you have a comprehensive cover of insurance, which cover yourself, your car, and third party. This is to make sure that if any of three of you is to get into an accident, they can recoup the amount of money of your car from the insurance, right? So if you're buying a new car, you're most likely to be required to have an insurance. So there's a little bit of technicalities on insurance. So if you are to pay, there's something called access, right? So which simply means that it's the amount of money that you need to pay before you can access the money, the claim. Any claim that you want to do, you need to pay this access to get that claim, right? That money back, right? So you can get a higher premium insurance, which means that on a month-to-month basis you'll be paying higher amount, let's say 2,500 for an insurance. So your access will be lower, meaning that if you happen to get into an accident and you want to claim, you're most likely to pay, let's say 4,000 rand for you to access the repair amount of your car, right? And if you are paying lower premium, which means you're paying low amount, maybe let's say 600 rand on a month-to-month basis of your insurance, your access could be 12,000 rand, meaning if you are to get into an accident, you need to pay 12,000 rand before you can get the amount of money that it costs to repair the damages of your car. So just make sure that you get it right, you know what this means, because sometimes people get into an accident and they don't have 12,000 rand at hand. So make sure that if you are to take an access of 5,000 rand, 6,000 rand, 12,000 rand, right? Make sure that you have that amount on your emergency fund so that whenever it's needed, you always have it. So I think, the way you should think about emergency fund, this kind of things, you need to consider them, and you should always have it on your emergency fund just in case. And that's why we have insurance, right? It's because some things can happen. So that's it from my side. My name is Zwannda Nana, and thank you for watching. And please remember to subscribe and like and comment on the section below. Bye.